If you're new to investing or you are contemplating the idea, you're looking for actually how can I make my money work for me while I sleep? Because that is the bottom line, folks. I mean, how great will it be for you to continuously see your money growing day after day, week after week, month after month, year after year, without you having to lift any finger? That's the dream, right? Well, I got some news for you, folks. That is exactly the strategy the smart money, the billionaires, the rich people use in order to continue not only to make money, but also to make that money grow. All right. So if you want to, or if you are already investing, in the stock market, it doesn't matter which type of product, which type of assets, whether it's stocks, ETFs, mutual funds, cryptocurrency, etc., etc. It doesn't matter. But I'm going to share with you in this video the only best way, the only strategy, the only thing you can do that will actually guarantee you 100% of the time success, growth, money when you invest in the stock market. There is no secret, there is no loophole, there is nothing illegal. Excuse me. There's nothing illegal behind this, but it's very simple. But the thing is, we are so focused. We are so driven on I want everything now, 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 especially the millennials. I mean, don't get me wrong, I'm 34 years old, so I get it, all right? But it's even worse for the generation coming after me, because this is what we call the Android generation. These are the folks that are born with a smartphone, a tablet, a phablet, a computer, a laptop, whatever you want to call it, video games. And now the metaverse, man, this is going to be interesting for them. But let's not digress, all right? The bottom line is, what am I talking about? Well, when it comes to stocks, few people actually tend to pay attention to what we call long term. Everybody wants to make money now. I want to invest now, and boom, tomorrow I want to be rich. Well, sometimes it happens. Remember what happened back in 2020 with Dogecoin, with Shiba Inu, with AMC, with GameStop. Those are kind of the stock that will literally overnight make you rich. But again, it will depend on the amount of money you would have put in the investment as capital. All right, because if you put $1,000 into Dogecoin when it wasn't even being talked about on mainstream media, by the time it was then talked about on mainstream media, or by the time Elon Musk was already starting to talk about that, well, you could have made a bunch of money, hundreds of thousands of dollars. It's the exact same thing with the cryptocurrency name Shiba Inu. Well, if you invested in few stocks like AMC and GameStop that literally went from gain 3,000%, 3,000% in a matter of weeks and months. Again, those happen, but those are kind of the exceptions of the rule. So if you want to go with the traditional, if you want to go with what is actually the regular way of investing in the stock market, you need first to get out of your mindset that it's a get rich quick scheme. Because if it's, sometimes there are high chances that it will go back down. If you see what I mean, there are plenty, and this is what we call sometimes a pump and dump. All right, meaning there will be like flies or bees around honey, and then all of a sudden, when all of the honey is gone, they will also be gone. So that is not the strategy to follow when you are willing to put in the work and to use this strategy I'm going to share with you in a second. All right, so that is the first baseline we need to put in mind before actually considering putting your money in the stock market. So before we get into the remaining part of the video, please, if you're not subscribed yet, please do consider, if you find value in this video, subscribing and joining the channel. And also like, please, it will help the algorithm of YouTube push my video to as much people as possible for this information to get out. Now, getting into exactly the details of what I'm talking about. This strategy is pretty simple, but it is not as easy as the other ones, willing to put the money now and be totally rich tomorrow. Why? Because this is not a get rich quick scheme. All right, it simply isn't. On the long term, if you invest your money in the stock market and you have this long-term visibility, you are always winning. This is what I'm talking about with proof. This is the S&P 500 index. An index is a pool of stocks. This is the pool of all the top 500 companies in the United States of America. There are many other indexes. We do have the Dow Jones. We do have the Nasdaq, which is mostly tech companies such as your Amazon, your Tesla, your Netflix, etc., etc. And then we have the Russell 2000, which are mainly, the top 2000. So it's kind of a level, a notch down when it comes to the S&P 500. But usually when it comes to giving a baseline or a comparison to the US stock market, we talk about the S&P 500 because, again, it's the top 500 companies in the US market. So if you look on today, for example, at the time of recording this video, we are March 10, and it's literally 1 hour away from the market closing, the stock exchange closing. So if you look, you can see that we have these ups and these downs, all right? So if you are a trader, meaning you want to enter the market, you want to buy a stock, you want to buy an asset and then sell it in a few hours, or maybe a few minutes after you made a significant amount of money, then you will look at this chart, you will look at this curve, you will look at this line going from here. If you bought here and then boom, if you sold here, you will have made 1% on the day. It may sound interesting, but you also have to look a little bit further. If we zoom out and look at the 5-day chart, so it's not only on an hourly period, we are extending it to a 5 days period. You can also see that, hey, it also went down and then it went back up and then it went down and it went back up and it went down and it went back up. So it is kind of a cycle. Not kind of, it is a cycle, all right? On a daily basis, on a monthly basis, because if we take the monthly basis, you can see that it went up, it went down, it went up, it went down, up and down, up and down. So it will be a lot more difficult for you to actually make sure every time you buy at the very bottom, and every time you sell at the very top. Literally, it will require you to be taped to your computer, to be taped to your smartphone, to be taped to the stock market 24/7, because the stock market, even when it is closed, we have what we call the pre-market and the after-hour session. The futures, meaning people outside, people with a lot more capital, with a lot more privileges when it comes to the type of accounts they have in the stock market, they have the ability to also trade. So when will it stop? If you want to make money while you sleep, because using this strategy, you will never sleep. So if you zoom out on the broader period, all right? If you zoom out on the broader period, this is just 1 year. So instead of looking at just 1 month or 6 months, let's look at 1 year. In the last year, you can see that the stock market went and gained, using these S&P 500s, this index, it gained 21%, all right, before started in January, and since then it had dropped. So even on a yearly basis, which you will think it's kind of long, it is still not really stable per se, all right, because we have a lot of volatility. The volatility is really when it comes down, it comes up, it comes down, it comes up, those cycles, those swings, all right. Now let's just zoom out the 5-year. If you zoom on the 5-year, all right, so 5-year will put us here in 2017, right? So in 2017, if you were invested at this moment, 5 years from now, you would have made 100% on your money. And this is kind of the rational, the average on the stock market in the US. Literally every 7 years, your money is supposed to double. Every 7 to 8 years, your money is supposed to double. But in the last 5 years, we've had many events. We had, the 2020, which created a huge opportunity for people to buy, and the market recovered literally months after, 2 to 3 months after the market recovered. And since then, it has been going up and up and up and up. At some point, it will have to go down, which we're experiencing right now since the beginning of 2022. But the bottom line is, if you zoom out, if you look at the 5 years period, you will make a lot more money. I'm talking about doubling your money, rather than, maybe having a 20% on a yearly basis, or on a 6 month basis, being flat or losing 4% of your money. I don't know if you get the bottom line here. The bottom line here is the more time you have your money invested in the market, whether you are adding on a monthly basis, on a regular basis, whether it's every 2 weeks, every paycheck, or every month, or every 6 months, or every year, if you just dump a lump sum in the market, well, according to the performance of the S&P 500, you will be doubling your money on the long run. You will be making a lot more gains and return on your money on the long run. Now, let's go to the max. Since the stock market existed, since the stock market were created in the 80s, in the 90s, I mean, the 800, yeah, the 18s. So if you look at the performance since then, you can see that you would have made 40 times the amount of money if you put it at this very time. If you put your money in 1982, right now you will have multiplied that money by 40x, 40 times. That is 4,000%, people. So the bottom line again is to see that, well, even despite these little swings up and down, ultimately the market always tend to go up, because the market is composed of companies, and these companies, they are supposed to make money year after year. So even if some companies are not making a lot more money, are not growing to the same pace as others, the fact that you are buying the whole market through maybe an index like the S&P 500 where you have your money invested gives you that huge amount of flexibility to actually balance the risk and the gains. All right. So even though time to time we may have a dip because of a crisis like in 2008, all right, or in the 90s with the dot-com bubble, or in 2020 with the pandemic, the COVID pandemic, you can see that the market always tends to recover. It's not a matter of if, it's a matter of when the recovery is going to happen. Now, let me finish this video by actually showing you some numbers to actually make this cemented in your mind. Let's just assume we start an investment with $1,000, all right? $1,000. And monthly, we're going to put in zero. So monthly, we're not putting anything. And then let's just see for the next 10 years, at a rate of return of, let's just use 10%, all right? In average, the market returns in the US usually 8 to 10%, all right? So let's just have a quick calculation of how much money an investment will be worth. Look, 2,700. Cool, isn't it? We made 1,700 on top of the 1,000 without having to put any additional money over the course of 10 years. Now, if we increase 10 years to 20 years, if we double the amount of the time where we are invested, boom, it is not only doubling, it is more than tripling. I don't know if you see this, folks. It's not only doubling, the period doubled from 10 years to 20 years, but the investment will be worth more than three times what it was worth before we double the period. Now we are making 6,300 on top of the 1,000. Isn't that amazing? Now, let's just assume we go to 30 years. All right, 30 years at the same 1,000 without investing any money, with a rate of return that is not changing. Boom, we're having almost 20,000. So the 1,000 created babies that grew all the way from 1,000 to 20,000. That is 20 times the amount of money you put it in there. Now, let's just switch a little bit so that you can see how powerful this is on the long run. Let's just add $100 every single month. That is 10% of the initial investment. Every single month, let's add $100. And let's go back to 10 years, all right? See? Initially, if we didn't have the hundreds, we would just have 1,700 on top of the 1,000. But by adding 100, boom, see how much money we have? We have more than 20 times that amount in just 10 years. Now, if I keep putting $100 every month and I go to 20 years, $83,000. That is 80 times that amount with just $100 every month, having started with $1,000. And if I extend it to 30 years, all right, meaning you start putting this maybe when you are 20, and by the time you are 50 years old, man, imagine you have $250,000. That is 250 times the amount you put, and literally a whole lot more compared to what you put every single month. This is to tell you, on the long run, you are better off, and you always win. You will always make money. You will always be successful at investing in stocks if you have that long-term visibility. All right, which is totally different from what we call day trading, which is totally different. I hope this gives you more, incentive into why and how this strategy can help you literally not only get out of poverty, but also create generational wealth, because it's really about what it is, right, folks? It is about making sure that our money works for us while we sleep.